Hey everyone, welcome back to Corporate Decoder. Today, Metals Acquisition Corp, FDMMU, just filed this 8K reporting on their recent IPO, and I'm seeing a few things that matter for investors. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing tells the story of a company going public through a SPAC, which is a special kind of company designed to merge with another company. So what we have here is a Form 8, which is basically a filing that companies use to announce big news to the public. For Metals Acquisition Corp, the really big news is about their initial public offering, or IPO. They are essentially a shell company, a special purpose acquisition company that is now publicly traded. Metals Acquisition Corp, or FDMU as you might see it on the stock market, has successfully completed its IPO. What does that mean? It means they've sold shares to the public for the first time. Raising money. This filing is all about the details of that event. Let's dive into exactly what was sold. The company offered units, and each unit is a package deal. It comes with one Class A ordinary share, which is a regular piece of ownership in the company, and then also 1/3 of a redeemable warrant. Think of a warrant as a ticket that allows the holder to buy a share later at a set price. So you get a share now and a potential to buy more later. The company has Class A ordinary shares, and these have a very small par value, an accounting term that is practically zero. The key takeaway here is that they've sold actual ownership stakes, and those warrants we talked about are redeemable. This means that each full warrant can be used to buy one Class A ordinary share. The price you'd pay to buy that share using the warrant is $11.5. This sets a cap on how high the stock price can go before it might be more attractive for warrant holders to exercise them. This IPO was a pretty big deal, raising a substantial amount of money. On the 9th of July 2026, the company completed the sale of 27,500,000 units. They sold each unit for $10. Do the math, and that's a massive $275 million raised. This money is intended to fund their operations and, importantly for a SPAC, to find and merge with another company. As with any big public offering, there are a lot of agreements involved. They have an underwriting agreement with firms like Cohen and Company Capital Markets and Clear Street LLC. These underwriters essentially help the company sell its shares to investors. Then there is a warrant agreement with Continental Stock Transfer and Trust Company. This is important because it outlines the rules for those warrants we mentioned earlier, making sure everything is handled properly when people decide to use them. There is also a letter agreement involving the company, its sponsor which is NLC America SPAC 1 LLC, and the company's own officers and directors. Sponsors are usually the ones who start SPACs and often get special shares or warrants, which is a common part of how these deals work. A crucial document here is the Investment Management Trust Agreement. This agreement details how the money raised from the IPO is managed. For a SPAC, most of the IPO proceeds minus fees are put into a trust account. This money is meant to be used for a future acquisition. They also have a registration rights agreement. This is common for SPACs and gives certain holders, like the sponsors, the right to have their shares registered with the CC so they can be sold more easily in the future. And importantly, there are private placement units purchase agreements. This is where the sponsor, NLC America SPAC 1 LLC, and the underwriters bought additional units directly from the company, often at the same IPO price, but outside of the main public offering. This section talks about those unregistered sales. It sounds complicated, but it basically means they sold some securities without having to go through the full registration process for every single sale. Right alongside the main IPO, they sold 825,000 of these private placement units to the sponsor and the underwriters. This brought in another $8.25 million for the company. The sponsor bought most of these 550,000 units, with the rest going to the underwriters. These private units are pretty much the same as the ones sold in the public offering, meaning they also have shares and warrants attached. This is a standard way for SPACs to get additional funding or incentivize their partners. Now let's talk about the leadership. When a company goes public, especially a SPAC, there are often changes in who is in charge. A few new directors were appointed to the board. Bronwyn Barnes, Quinton Henai, Hugh Callahan, and Michael Porter are now on the board, with Bronwyn Barnes taking the lead as chairwoman. This is typical to bring in experienced individuals to guide the company. These directors have also been assigned to key committees. Michael Porter, Bronwyn Barnes, Hugh Callahan, and Quinton Henai are now part of the audit committee, with Michael Porter as its chair. The audit committee is responsible for overseeing the company's financial reporting and internal controls, which is super important for maintaining investor confidence. Michael Porter, Bronwyn Barnes, and Hugh Callahan are also on the compensation committee, again with Michael Porter as chair. This committee decides on how executives are paid, including salaries, bonuses, and stock options. Speaking of officers and directors, the company also entered into indemnity agreements with them. In simple terms, this means the company agrees to protect them financially if they face any legal trouble related to their work for the company, which is pretty standard practice to attract qualified leaders. Companies also update their foundational documents when they go public. They amended and restated their memorandum and articles of association. Since this company is incorporated in the Cayman Islands, these are their equivalent of a company's charter and bylaws. These documents establish the company's structure and how it operates. This section covers any other significant events that don't fit neatly into the other categories. And here is a key piece of information for any SPAC investor. The vast majority of the money raised, that $275 million from the IPO plus the private placement, is held in a trust account. Continental Stock Transfer and Trust Company is managing this trust. This is designed to protect investors' money until the SPAC can find a target company to merge with. The funds in the trust are only released under specific circumstances. The primary goal is to use this money for the company's initial business combination, meaning the merger with another operating company. If they can't find a merger partner within a certain time frame, usually 18 to 24 months, shareholders can get their money back through redemption. This structure is meant to give investors a degree of safety, as they know their investment is secure until a deal is made or it is time to return the capital. The company also issued press releases to announce the details of the offering. One announced the pricing and another announced the closing. These are standard communications for an IPO. This final section lists all the official documents, exhibits that are part of this filing. It's like a table of contents for all the supporting documents. We see the underwriting agreement, the warrant agreement, the letter agreements, the trust agreement, and the press releases. These are all the real paperwork that makes the IPO official. Now, looking at these results more broadly, Metals Acquisition Corp has successfully executed its IPO, raising a significant amount of capital. The structure with units consisting of shares and warrants along with the private placement and the trust account is all very typical for a SPAC. The key risk for investors holding FDMU right now is whether the company can find a suitable business to merge with within the specified timeframe. If they don't, investors can get their money back, but they miss out on the potential upside of a successful merger. What I am actually looking for is how quickly they can announce a target and what kind of business it will be. The research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.